Hello, everyone. This is John Blank, Zacks Chief Equity Strategist and Economist. And today I am going to do something I've wanted to do for a couple of years. And I've waited on it because I've wanted to do it at the end of 2022, looking into 2023 with the last monthly strategy report for Zacks on this year before we roll into the new year. The reason for that is I've got a new structure for you that I want to show, a 5-part structure that gives you the keys to understanding how to use the strategy report most effectively. There's always been a need for a video like this that explains how I put the strategy report together and how I think you should use it. So that's what this is. This is for you as a guide to get more out of the Zacks market strategy report. It is 70 pages to 60 pages long, and there is these 5 sections, and I need to show you how I put them together. So this is the December 2nd version. You'll see all of this out for those with Zacks Advisor tools in 5 parts. In the rest of years, they will come out in separate PDFs along with a PDF for the entire report for those who want it in that form. So from now on, we're going to have 5 parts to this, and that's how I'm going to introduce this. But first of all, this is the forecast for future asset class returns. And what we mean by that in this report is 12-month look ahead. So for this December report, this is year-end 2023. You can think about why I like to do it now for the shelf life of next year, right? So what I do to put this together, I really do sit down with our proprietary models on Zacks Research Systems, ERS. I really do sit on the investment committee with Mitch Zacks and his team once a quarter, and I get feedback from them, and I give feedback to them. I interact with Shiraz Mian all the time. And then we go through material. Consensus Economics in London, we've subscribed to it, and I provide a lot of their updates month to month. I also use the San Francisco Fed views. Some people don't understand why I would take an outside economics report. People need to understand the Fed drives the market now. It has been driving the market for at least since 2008, and it will continue to drive the market. The other reason I like the Fed use is it gives people who with an economics or finance background a chance to learn what not only the Fed thinks, but how to think like an economist. So it's a nice monthly document, 8 or 9 pages. There are a number of times where I have, like this month, swapped in things from Jerome Powell or Lael Brainerd or other Chris Waller or other people on the FOMC who have material interests, because the Fed views doesn't always come out particularly, confidently every month. So sometimes I swap it in for something more interesting. That's at the Federal Reserve FOMC level, not the San Francisco level. Okay, also, we do the sell-side investment strategy report, the CIO report. I do this once a quarter. I access CIO views. That will be included in one of the 5 parts, and we'll go through it. And all of this is integrated to get to the Zacks forecast. So this is, just remind yourself, this is the front page. We'll always skip through it, but this really is how we do it, and this really tells you how to go about it. Okay, so like I said, the table of contents will now be divided into 5 parts. We have commentary, we have top-down Zacks rank, we have asset allocation, and we have outside Zacks top-down views, and we have international ETFs and macro. So for this part, you can see this is a 60-some page report, and the first 40 pages are commentary. This is always the case. I put this commentary up front, and then all of this is basically data, and it breaks itself down into 4 parts. So what you need to understand here is, in being an economist or a strategist, there's basically 2 models. One is the guru model, that I'm a guru, that I have lots to say to you. The other is the curator model. Curator models are people who are curating facts, evidence, opinions outside the company, and sharing them with you. In all cases, economists and strategists are both curators and gurus. So in this report, it's always a mixture from starting at the guru level and then moving all the way to full curation. There is obviously some data in this part, and there's some guru-ness down here for sure. But it's just the idea that I want to conceptually provide to you that number one is where you're going to get the commentary. It's what you're going to get to learn from me. You're going to learn US outlooks and global outlooks. You're going to learn the Fed view, and you're going to learn the Zacks forecast at a glance, which actually is quite significant. And I'll give you all the pieces and parts of that. All right, ZRS chart of the month, the ZRX S&P 500 sector picks, and the industry tables. This is all data-driven Zacks stuff. This is really critical. It is the top-down way to use the Zacks rank. Now, the ZRS chart of the month will always have the valuation forward look. So it'll be breaking down into sector, and I'll give you the story of the valuations on a sector level. The Zacks rank sector picks are also going to give you the read through to the industry tables. It's just giving you a page summary of the industry tables at a sector level. The industry tables are in fact arranged to give you the S&P 500 sector calls that I make on the 250 Zacks industries. In this particular report, they roll up to what's called the mezzanine ranks. Mezzanine ranks have 62 different industries. So you can think about it. We've got 10 S&P 500 sectors, maybe 11, and we have 62 industries. So there's going to be 5 or 6 industries in every given group. Some have less than that. Some have 3, like healthcare. Some have lots, like industrial, which probably has 10 or 11. So keep in mind that it is, at the end of the day, my sector calls are just eyeballing the industry tables. Number of people looked at this over the years internally. You have to understand creative destruction and the composition of industries is very subjective. And you're trying to imply some kind of criticality, some kind of evidence-based thing, you still need to eyeball it and peer out the differences. For example, healthcare's had 3 industries. They don't change very much. The ranking doesn't change very much. Things like industrials and materials, info tech, banks, they change a lot. All right, asset allocation guidelines. This is what the report's really about. And again, I'm going to give you one part, which is the guidelines. These are overweights, underweights, and market weights. When I do that, I am implying what I think you should do about standard risk profiles. On the back of the asset allocation data, the next page is risk profiles. And these are things I don't choose. I ask you to choose them. Because the point is, I don't give you one set of percentage guidelines because I don't know if you're very aggressive and have only equities. I don't know if you're all in income and have only bonds. I don't know, more likely that you're a 60-40 kind of portfolio where you're somewhere in the middle with some growth and some income. So you first have to choose what risk profile you are and put your base benchmark market weight, I would call it, asset allocation percentages into your portfolio. Then from there, you can ferret out from my overweight, underweight, and market weight calls how you want to move those portfolios on your risk personal basis. But keep this in mind. I first need you to understand, and we'll always skip through that page. You'll just see it almost like it's boilerplate because it is. I just put it in there as a reference for you to choose your personal or your client's personal risk profile. That's the first stop in any asset allocation. I cannot do that. Remember, this is a top-down report for people who are still adding value. Advisors add a lot of value. This is not a report that's going to be completely locked and loaded for you. You have work to do, and that's because you have insights to share. The equity style block returns get into the market weight, blended, value, growth, mid cap, small cap, large cap styles, and gives you a returns guide. This is all model driven. And the models here basically run back into the asset allocation guidelines. Keep in mind, when I present the style block returns, I'm tying my hands and showing you those returns in the asset allocation guidelines, particularly for equities. Bonds a little different, commodities a little different. I have other quarterly reports that generate from and for Zacks. If those of you who know consensus macro, that will give me my energy and commodity calls. All right. Outside top-down Zacks reviews. This is the December buy-side and sell-side consensus. So this is outside the company. This is the quarterly CIO survey, which is the buy-side. That'll be our CIO survey, and the sell-side, which is Wall Street. That is true Wall Street in New York, particularly, and the 12 or 15 or 20 companies that make up the consensus on Wall Street, particularly on stocks. This forms our outside consensus. It is the fourth piece. The fifth piece is the international ETFs and macro. Now, obviously, all of this is US specific to here. This is not. This is going to be your international stuff. These are your updates on the key global regions. This is the stuff where you're going to get the market PIs on Japan, India, China, the US, and Europe. Those are my big players for equity allocations internationally. Obviously, that does not touch greatly on the emerging markets. I don't have India in there, but that's going to give you a starting point. Market does a great job. I only present their press releases in very little and very small excerpted pieces from that, but this is where you can get that information. So once again, let's look through it. All the commentary up front, the top-down Zacks rank, the asset allocations, the top-down Zacks views, and then the international ETFs and macro. So I'll come back to here again. I'm telling you this now. I'll show you this, and then I'll come back to you to this again, and we'll close this up. Okay, so like I said, the commentary begins. It always begins with a monthly view on the equity markets, and it always begins with the US markets. Those of you who know my Zacks Professional Services video, I have been using very critical and interesting slides that I have pulled out of there. I don't necessarily have to do that. I just like to do that. Sometimes I do, sometimes I don't. But the basic point here is US specific. So I will try to tie in something that matters to the markets currently in the US, particularly this time. It is the automotive battery market and electric vehicle market and plug-in market. Now, obviously, what I like to do is bleed this into the next section, which is the global markets. Now, global markets is going to always have something non-US based, but global markets does mean US and non-US. International markets mean just outside the US. That's, like I said, the fifth chapter. Global markets is including the US. So do not be surprised when I talk about US specific things here. I do that in the sense that I want people to know that the US is internationally integrated. It is involved in all of these events that are happening internationally, and it does matter for these stories. Particularly this month, I had the European story, and that carried on all the way through to Russia and the UK. Now, again, here we go. We've got the macro outlet, San Francisco Fed views. As you can see, I used a Lyle Brainerd talk that she gave at the Bank for International Settlements in Switzerland, and it had the same structure as a Fed views. So this I actually like better because she's a vice chair of the Fed, and she's giving you the Fed's view on the economy. Remember, this is curating. This is not guru. I'm telling you, as a trained economist, what pieces I think are worth reading. I have read it, and I think it's worth reading. They'll never be more than 6 or 8 pages. They'll always have 8 or 9 graphs. And this is something you can both learn from and use in your own PowerPoint slides, your presentations, and your own education about how economics really works. So in this case, you can see we're going to go through figure 1, headline inflation, figure 2, domestic final purchases, figure 3, consumption expenditures, and she's talking about inflation, of course, personal consumption expenditures at the monthly level, and then on into uncertainty about assessments of GDP, expected price changes 5 to 10 years from now, the supply chain pressures, obviously, really interesting stuff, figure 7, the ISM supplier deliveries. By the way, I produce and handle in this report the ISM, and I have an formal agreement with ISM to put in my report, and I'm grateful for that. And I use that because I think ISM is critical for forward-looking work. It goes in the economics part of this review. Okay, then we got labor force participation, and then, of course, we drop into the Zacks forecast at a glance. Now, this section, you're going to have these titles here, and these are going to lay out various sections you can also just take out. This is very much considered the longest part. I have all kinds of material. Again, when I write this report or put this report together, I don't necessarily think people should go top to bottom all the way through it every time. I assume some parts of it you've seen before or you don't really need to update. In this particular case, I'm going to give you the story of the outside fair value and the Zacks fair value. So this is where I'm giving you the run up, the backdrop for where to look at the targets for 22 and 23. I will start there. Then I go through small cap and S&P 500. And then I move through some other valuations, differences in the stories that are surrounding it. I always put here lately the ADP payroll numbers. Again, I like just a simple summary of the chief economist of ADP and what she has to say. And then this is all Shirazmian stuff. This is our views on the forward look on quarterly earnings. For this one, I've got 2022 and half of 2023. This will roll forward and change, of course, as time goes on. Then, what fundamentals are U.S. stock markets pricing in? What I do here is, again, I give you the returns at a sector level, and then I show you the Zacks industry ranks that I'll show you later. So the returns here, you can obviously see energy's done it real well here, and of course, it's very attractive here. Financials have done not so well, but they are actually very attractive now. There might be a trade here for financials, but not energy because it's already priced in. So you can use this here and this here as a really nice summary of what is being priced in, like I said. Okay, on we go to the COVID situation. I leave this in there now because the special section, I don't necessarily will continue to have it always. I don't know when I'll drop it, but of course, COVID is the thing that we're recovering from. It's why we have inflation so strongly now. It's why we have supply chain pressure. COVID matters, particularly in China and the situation there. Those of you who think we're over it in the United States, yes, we have 68.5%, 70% of our population that is vaccinated twice. Outside the US, I want to point out 25%, right? So it really is not over because the vaccinations are not comprehensive outside the United States. Keep this in mind. This chart there, it could go away. Fair value on S&P 500. Again, here is Zacks sectors. There are 16 of these. Zacks profit margins and the look ahead. I'll put in my stock strategist thoughts here. When it's in green, this is just giving you my basic view on the forward look for fair value. Okay, and I'll tell you what I think about this, and I'm going to give you my thoughts on why I think it's going to matter: the VIX, the Fed, bottoms up estimates, etc. Here, setting returns expectations for 2023. This I'll just tell you what I think you can do, bulls and bears. So again, I separate out, Shiraz doesn't do this, I do, bulls, bears, and market weights. So again, I'm leading you into where I'm going to head, which is those asset allocation tables. All right, what produces optimism? For those of you who got clients out there, sure, we can all be on one or side or the other of the trade, right? We can all be buyers or sellers. So this is, why should you be buying? And I always update this every month for you. I always tell you what I think is worth thinking about in terms of telling your clients why you should be buyers. Here, then, of course, I'm going to go to why you should be sellers. So even if you're a buyer, know the story of the sellers. If you're a seller, know the story of the buyers. Because I'm going to tell you in two parts why there's different issues for you to worry about. Why stocks can go up, because you're pessimistic, doesn't matter. There's optimism that you may not want to factor in or don't factor in. Conversely, you may be very optimistic, but I'll take you through the pessimism. And of course, 2023's got lots of that available to you. As you can see here, I put the housing story right at front and center. That, of course, is where it should be in the pessimism. All right, the meme stocks, they've blown up. The SPACs, they've blown up. Those are all pessimistic stories. Then I will give you whether it's time to buy stocks on the basis of this. I'll always update this. I'll put this in usually underlined, and then I'll go back to the screen stuff. I like to do this to give you, again, if you just want to skip everything, you can go right here and find out what I think about that. All right, so on we go into what I consider the next level of my story, which is going to be the economics outlook. Now, what I do here is this is again more curation, the guru. I will find a monthly economic outlook that's not mine. You have to remember, I do write the monthly economic report. I do put my own opinions in that report. So this is, again, for you to match to what I think, to have a good economist opinion that's not the Fed, a market economist opinion. And I'll put it here. In this case, it is a government one, the OECD. I've used, top big four ones. I've used Wall Street ones. I will change them out every month. Then, of course, I give you the GDP growth. What I need you to understand here is I will use GDP now from the Atlanta Fed, and I will also use the consensus economics data that we buy from London, and I will update this. I will tell you the forward look on these areas of the United States, and I'll tell you where the job numbers come. Every month, we put this out on the job number day. This is critical, and this is always actually the last part of this report that I write. I wait until this job number comes out on that Friday, payroll Friday. I update this last thing and I send it into our graphics design team and their editors, and they take it from there and they put it out to you. So I always realize this will actually be the last data that I will always include, the payroll data, because that's the most important, that's the most market relevant for a monthly report within the economics context. So then we go all the way down. As I told you, I have an agreement with the Institute for Supply Management. You can see the copyrights, all of this is part of that agreement. People ask me why I put all this. I really think just the way they present it is the way you should read it. It has lots of good information. We live in a Twitter age. We live in a lot of soundbite age, a lot of excerpts. And again, this is going to show you, you don't necessarily have to read it all, but you should read it at least once, all comprehensive, so you understand what's in it, the parts of how and they organize, just like I do, into specific sections for you to look at. I'll make it a little clearer for you than their report. I will put bolding, I will separate out the sub-indices. I will show you where demand inputs and consumption are going, and I like this part, particularly what respondents are saying. Fascinating stuff for the detail, particularly when we're in stocks that you might own or industries that you might own. This section is really nice to get a hold of. You can learn what people are actually saying in the market that are in the market running businesses. It's kind of Warren Buffett thing. You know, if you want to be a better stock investor, be better at the companies. This is company stuff. It's critical. Status of energy markets. Again, here I'm going to borrow from my own quarterly energy outlooks, which I get every 2 months from Consensus Economist. I update our own stuff every quarter, and I'll put together some of the ZRS tables plus the Energy Information Administration, the EIA, and some of the stocks. I'll put together the story quickly on one page for the energy story. Then we're going to get into these asset allocation summaries. Again, this is basically Shirazmi and stuff reorganized for you in a forward-looking basis with the history. So what I do for you that's value added from what Shiraz does not do is I update it and put it into the context where you can use it in this report. So if you want even more updated reports, you can turn to Shiraz reports and you can look to see if these numbers are where they are. So I'm going to always tell you when I drew, what date I drew Shiraz's stuff here. In this particular one, of course, this was the November stuff that I bought in. So you can see here all the stories. I'm telling you what went up and down again. Other asset class summaries. I'm going to get through all the different stocks and subclasses. I'm going to get to the Fed funds rate. I'm going to give you the yield curves. I'm going to give you corporate bonds and investment grade bonds and municipal bonds and WTI oil. I'm going to give you gold. I'm going to give you gold and silver charts, and then I'm done. So keep in mind, this is the beginning of leaving the commentary section and entering the asset allocation section. First off, we're going to go through top-down sector industry studies. So this is section 2. This will always be marked out by this blue separation telling you the story of this. So again, this is boilerplate, but it marks the section 1 from section 2. So when you see this, this is start of section 2. And you can see, here we go, this chart of the month. These are the valuations I told you about. Here's the actual valuations current to the median, the difference. Here's the chart. What this is just a nice way to introduce the valuation before I show you the Zacks ranking as it rolls up to the industries and the sectors. I think valuations is something we can add through ZRS, and I put it up front. All right, the sector picks. Like I told you, this is going to be the 10 sectors of the S&P 500, not Zacks. We have 16. So I changed that format for you so you can use Spider ETFs, iShares ETFs, things that are organized, the SPY. This is why I do this. I'll give you my short summary of what's going on, and I'll rank order the industry. So here you can see energy and financials is at the top. All right, this is probably the most important table in the entire report, the most proprietary table in the entire report, the Zacks Rank industry tables. Now, what you can see here is we've got 5 different categories: very attractive, attractive, market forward, unattractive, very attractive. I should say very attractive, attractive, market forward, unattractive, very unattractive. So the really doggy ones are over here, and the really nice ones are over here. Keep this in mind. This is your market weight. This is your really outperforming sectors, and this is your really underperforming sectors. Now, see, here we got attractive. Why did I make consumer staples attractive? Because look, these four sectors are all in either attractive, very attractive. This one's basically at market perform, and these are only two are really unattractive. So basically, I gave the weighting to the attractive. Now, looking to these numbers, you can see this is from 2 to 6. A 2 is a number 2 rank. A 3 is a number 3 Zacks Rank hold, and below that is obviously our 4s and 5s. So this does tie to an individual Zacks Rank, but it rolls up. So this is the agribusiness Zacks Ranks rolled up to 2.5. So in this industry, if you look online, and you can go to Zacks heat maps, go to Zacks heat maps and Zacks industry tables, and you can actually find out what is in agribusiness. And you're going to find out there's lots of 1s and 2s in there because it's rolling up to 2.5 right now. It's a very attractive business right now. So that would be indicating that you can find number 2 rank and number 1 rank stocks in there. I don't know at any given one point in time how many companies in our agribusiness. It might be 15. We'll see. Well, you'd have to go to the industry table section on our website or in the Zacks Advisor tools, or to the heat map and get a hold of it. All right, consumer discretionary, energy, healthcare. You can see, like I told you, there's not as many industries here. Lots of industry groups. This is actually, again, very strongly ranked section. So then I always end up in this order. They don't change where their position is. They do change their ranking story. I'll always end up with this one, utilities, communication, service, materials. And it does go through this style. It doesn't change in terms of the sectors. I always leave them like this. All right, this is the asset allocation table I told you about. This is the forward look on the 12-month return that's model driven. These are my personal comments. Sometimes I'll put uncertainty in play where I just don't understand whether I am or am not very positive about things. Lately, I've been leaving these alone because we've just been in a kind of a curious place, but I can change my views where I really don't have an opinion strong one or another. I'll let you know that. Here's the different sections and styles of the major classes: international, bonds, gold, commodities, and cash. Again, here is giving you my stories of what an overweight, market weight, and underweight is. That ties you over to here. So this is, one of the benchmark tables that's going to work together. And this is, like I said, the boilerplate about your target allocation. So if you're really on a risk profile, you're going to take 75% stocks. If you're really on an income profile, you're going to take 18% stocks and 80% bonds. So keep in mind, this is, max stocks. This is max bonds. These are all your middleweights. And this is an ETF thing. If you go to our ETF part of our website, you can type in these tickers and they will pull you into, for example, the SPY will give you the large cap areas. The EM and the FA will give you the international. The ag, of course, aggregates, things like this. So these are what I would use in the ETF for these sectors. That's not necessarily telling you have to or you should. You should go and look for where assets are being accumulated from asset under management. Once you type into these things and find out these sectors and find 5 or 6 of these areas that are worth putting in if you want to. This is just leading you in the direction of personalizing your choice, both on your asset allocation weightings and on your ETFs that benchmark it. And then you take this, for example, this is maximum. So you would me at 75% allocation of maximum stocks. And now I am actually overweight this stock. So I might take you to an 80 or 85 or even 90% on an overweight, right? Because I'm telling you, this is your benchmark. That's a market weight 75. So overweight would be above that. And that's your job to ferret out. First, you got to take your clients through which of the 5 profiles they prefer to benchmark to, what they're going to put in for those benchmarks. If they don't already own things, a lot of people do own things here, and you just have to figure out what category you're in and then run your biases out through this and then come up back to here. So again, this is actually the first stop, but since it's boilerplate, I put it in the back. This is where I really change things every month. This is what you have to get through and do with your clients. All right, the style box returns. This will have with model returns and with dividends for small and large cap. I talk about the mid caps down here. This again is just stuff for you to assist. This actually is completely consistent with this. Realize that this and this are the same. I'm just doing this. I generally update this every 2 months, not every month. I do that because it doesn't change that much. But when there are times when the markets really have moved up or down, and I really feel this has changed, obviously we're going into a recession year, I might change it every month. It depends on whether I think the results are robust to the changes that have happened to the markets. All right, the consensus buy side and sell side. Now we're getting into number 4. This will be the sell side first, their views, their up, where their max and mins are, their median targets. I'll put in some models of sell side views, the equity risk premium story, and then I'll get into bottoms up views. These are, again, not Zacks views. I will put the Zacks view down here, but this is what's outside us. This is what I think relative to that. So this, again, is outside. We're going through, again, to start the sell side view and then into the buy side view. And we're going to go all the way through all these different sections to this section, the buy side consensus. This is the CIO report. And I put it out here, our CIOs, October. So this I will update again in a few months. This is what the CIOs then told you about these things. And I share them. For those of you who go to ZRS, you can find this as a separate report and a separate PDF. Of course, that gets us to the final section, the international. Number 5. So I put this together because sometimes people care about the international, but they really can't care about it. It always comes at the end because I don't think a lot of advisors out there really care about the international. But for example, now we've actually had a big move to the international the last few weeks. It's been dead for years, not always going to be dead. I rank order this on the market cap weighted. So here you can see really only the major 10 international stocks. So these are not US at all. These are the ones that are only with stocks outside the US. This is not global, this is international. Then I'll go through this. This is, again, boilerplate. This is just telling you the story that S&P tells you of why the S&P itself, that index, has exposure to international. So if you want to understand the S&P 500 exposure to international, read through this. I try to update this once a year. This gets to my global macro stuff. I up this once a quarter. I just did this. This is the currencies. And when you get into international ETFs, particularly now, it's all really about what's moving the currency. Particularly if you're in Europe, you want to know what the euro is going on. If you're buying Brazilian stuff, you want to know what the Brazilian real is doing. If you're in the UK market, you want to know what the pound's doing. So on and so forth. So this gives you my update on what the US dollar is doing. Here, this is from Vanguard. It gives you all the different 5, 10-year rankings and updates on these various international indices. So you can, again, look back to my table, my Zacks table, look into the Vanguard table, and you have much more detail on what types of international exposure you could introduce to your international, to gain your international exposure. If they start going up, obviously they haven't, but they have in the past. And at some point, this will be very interesting. Then I get into my final part, which is the market, IHS market manufacturing PMIs. So you've gotten the ISM PMIs, now you have the IHS market PMIs. Keep in mind, I put these in the same order. It starts with the JP Morgan Global, goes to Europe, number 2. Number 3 will be Japan. Number 4 will be China. Number 5 will be India. There it is, right there. And that is the summary. You can see I got out 72 pages on this report with 5 sections. Basically, let's go all the way back like I told you. I'll scroll through it all the way. And you can see, once again, we're back at the top, how we put this together to this core idea. This is all you need to remember. The commentary up front, the top-down Zacks Rank tables. This is the top-down view of this company, Zacks. Our asset allocation, which has this 3 parts to it, 2 that I'm outlining here. The outside Zacks top-down view, buy-side, sell-side consensus, and the international. So once again, this is how you can read it if you want to read it all. This is also where you can go to each section, which we will now break out for you and separately as an advisor tool, and just read it. But understand, if you read the commentary, you're going to get a better understanding of the asset allocation. If you read the asset allocation table first, you get an understanding of the commentary. If you read the international stuff, you understand the global view, for example. All of this relates to itself in some way, shape, or form. So keep in mind, this is the story of our latest 2023 version, and that now you will get this entire report in one PDF file, or you will get one of the 5 parts of it. So I hope this is helpful. I've wanted to do this for a long time, and I hope this really helps you get more advice and insight and effectiveness out of my market strategy report. Thanks for listening, and please get a hold of the Zacks Advisor tools to get a hold of our clients' sales help, the support people, get a hold of our sales staff. Zacks Investment Management as well, of course, uses this. All these is coming back to the source of all that and how you can put this to work and break it up and distribute it to your own clients. I hope this is something that improves that for you and makes you understand why it's so worth going through every month. Your mind is an attic. Clear out your attic with the freshest ideas. The last stop of any screening or choice is actually what's in your head. When you clear your head with this material, you really set yourself up to look forward. Forward-looking thinking is done on a religious monthly basis. If you want to be disciplined, that's your job, really. Clear out your attic, clear out that mental attic, read through the report, and get to the moment where the markets really are. You can't say markets carry information if you haven't collected it yourself. That's where I'll leave this at, and I truly hope you enjoyed this. Please get back to me if you have any comments. I'd love to hear about what you think. Thank you.